But let me now welcome on board, the fact that Mass Financial is injecting monies into their subsidiaries. Let's try and understand what the theme and the rationale behind this is. We have with us Kamlesh Gandhi, CMD at Mass Financial Services, joining in on the show right now. Kamlesh, hi, morning. Good to have you on ET now. Firstly, let's talk about this latest development, the fact that you've invested roughly about 15 odd crore rupees in your rural housing and mortgage finance subsidiary. What exactly is the rationale behind this capital infusion?
So very good morning. As if you say that we have been infusing in our subsidiary very regularly from time to time. So Mass Rural Housing and Mortgage Finance Limited is into affordable housing, and we also work in the rural places. And our first target is to reach 1,000 crores of AUM within next 18 to 24 months, and with a view to have the strong foundation as far as the balance sheet is concerned. We infuse capital from time to time, and this is an endeavor in that direction.
And what will happen with this capital infusion? I mean, in terms of the growth?
I think we target a growth of anywhere between 30 to 35%. And I think with this infusion, we have infused total 20 crores. And with this infusion, I think will be good for another year. And by this time next year, we'll be infusing some more capital in the proportion it is required.
There is a big change which has happened at MSC level in terms of how the creditor cycle will work. If you are an MSC manufacturer and if a company owes you, the debt cycle has to be settled in 45 days, which means the requirement of working capital in the entire MSME sector will change. How will that impact you, your business, your credit lines, and your entire chain?
I think that requirement was one of the areas of requirement from a long data cycle. But besides that, this MSME segment requires there is a huge working capital gap. If you see any of the surveys, we see currently a recent CRISIL survey shows a working capital gap of more than 8 lakh crores. So with the huge market credit gap in the market, I think the demand for credit will continue to be very robust in this segment as I see.
Do you expect Reserve Bank of India to start easing liquidity, given that now growth is okay, inflation is coming under check, and if that happens, then how will that impact the entire space?
I think we have time and again assurance given by the governor that liquidity will not be a problem and impediment for the growth. And in that lines, we have seen current action from the Reserve Bank of India also stabilizing the rates to a certain extent in the CP markets. And going forward, once the liquidity is injected, I think that will be a move in the right direction to fuel the growth, and it will be available to all the stakeholders in the economy. And for people like us, especially in the NBFC sector, it will be helpful for us to gain the liability or to get the liability to the extent we need and distribute it further.
I just wanted to also understand the outlook when it comes to the instruments of the company, because they have seen a credit rating upgrade. Do you think we can expect your cost of borrowing to reduce now, given that it was higher by about 84 basis points for Q3 on a sequential basis?
So majority of our borrowing is MCLR backed borrowing, which is a reset of basis on the type of the borrowing we have, that is from quarterly or half yearly or yearly. So definitely whenever the reset happens, we'll be in a position to reduce the rate of our borrowing. And it will give us a room to tap the capital markets also, because capital markets purely works on the rating of the company. And with this rating, I think we will get an opportunity to tap the capital market at an affordable or at an acceptable rates.
But Mr. Gandhi, what we've noticed is, and please correct me if I'm wrong here, that over the years, the contribution from your housing business has not been very significant when it comes to your overall top line. So tell me, what is driving this confidence that you continue to pump in money into the subsidiary and hope to scale up this business further?
So while housing market is a huge market, it took us time to be ready to tap this market. And if you see that while we have a smaller AUM, the quality of the asset has been very benign. We have 0.52% as stage 3 assets as compared in relation to our AUM. So we took our own time understanding the markets, stabilizing our systems and operations, building up our network. And now we are confident that this subsidiary will contribute very meaningfully. And we expect this to contribute around close to 10 to 15% in next 3 to 5 years.
Given that you had also started that new product that was for salaried customers, which is sourced directly through the fintech partners, tell us how this is performing, how it contributes to your overall AUM.
See, the salaried personal loan, whenever we started, we were of the view that we like to keep it below 10% of our AUM. So currently it is around 5 to 6%. And we do it both through our fintech partners and through our direct distribution also. And we are moving very slowly in this segment. And so far, the quality of the asset has been very good. And we have been very cautious in lending to this segment, while we see that it is a huge opportunity going forward if it is done in the right fashion as far as extending credit where it is due is concerned.
Gandhi, really appreciate your time. Glad you could join us with your valuable inputs.
If you like this video, then like, share and subscribe to ET Now.